Hello everyone, I'm John. I'm a trader and I'm also a coach here for Adam. And today we're going to go over the very basics on charts. Uh, Here you can see a chart of mini S&P, which is basically the asset we're going to be trading. And we're going to understand a little bit about the chart itself. So we're going to start with candlestick. Well, what you can see here is what we call naked price action. It's the action the price actually took. You can see that it went up and then down and up again and down. And those candles of different colors, uh, we call the blue candles or red. Some charts show them as green, or you can even change the color, or they could be black or white. But the positive candle, meaning the candle that goes up, we call them bull candle or bullish, like the bull market, meaning when the market goes up. And the negative candle or red candle here, when the market, the price goes down, is a bear candle or bearish, meaning the market is going down. What about those other candles here that are colorless, like just white? They're called doji, and it means that they opened and closed at the same price. So you can see the body of the candle is here is full and colorful, but there's also something else here that we call wicks or shadow or tails of the candle. Um, they are just a shadow. So this candle here, as it was a bullish candle, we can see that it opened at the price here at this price, and it went down all the way and then up again, and it closed at this price. Now with this bearish candle, we can see that it opened here and then it went up to this point and down again. So the body of the candle represents the opening and the closing of the candle, while the shadow of the candle just represents the maximum and minimum price that this candle reached. All right. So, and these are the only three types of movement candles can have. They are either a bullish candle, meaning they're going up, or a bearish candle, meaning they're going down, or they're a doji, meaning they're going nowhere. It opened here. You can see that this one here has a big shadow. Like it went all the way up here and then back and closed at the same point it opened. This one here went down a little and up a little and closed the same price it actually opened. And candlesticks, they are formed based on a period of time. And here I'm using the 5 minutes, but we could change that to 1 minute or 15 minutes or 1 hour candle, and we would still have the same results. See a bearish candle here with a huge shadow, another one here, a doji here. So, well, having that covered, we're going to resistance and support, which is basically what we need to understand the most in order to perform one of the most commonly used strategies here. So what is a resistance or a support? Basically, a resistance or support is an area in which there was a congestion of prices, meaning the market tried to break out that level of price, but couldn't for a while. There was a resistance. So let's go back to the 5 minute graphic chart, and maybe it's clearer to see. As you can see, the market is still going on. It is 9:55 right now, but this market is at 24/7, so it's still open. It's still going on. And as you can see, this level of price here, which would be 495.5, it represents a support, because as you can see, the price touched it here and then it went back up and then touched it again and then went up again and touched again and went up again, and right now it's again here. So we can see that this, it's level, it's an area where the market had some trouble breaking out or breaching this barrier here. So we can say that this is a support. On the other hand, what we have up here above the price, an area here, a level of price that it was very difficult for the market to break out and keep moving up. So you can see here the 495 and a half, and the market went up here and then down again, and then here it was finally able to break out, but just half, like a quarter point. And here again, then all the way back down, and again, and then again here, and again, and again. All right, so this is what we call a protection, a support and resistance area or zone. So our chart here, it has some tools that helps us to draw some lines. Just go over to drawing toolbars and select here the horizontal line, and then let me zoom out so maybe we can have a better view of this support line here. There you go. You can see that this support line also proved to be a support in different times, see, different dates. And if we zoom out even further, we might be able to see that it act as a support also on different days. Take a look here. This area here on the 22nd, and then again here on the 22nd, and then on the 25th. Now let's go for our resistance line. And here we go. Oops, my bad. Click again, select it, and there you go. But we can do that, and we're using different times. Like, let's try to use the 15 minute chart and see if the lines are still the same. As you can see here in the 15-minute chart, those lines will still be a support and a resistance. We call support because it's below the price, the current price, and resistance because it's currently above the price. But as soon as this price breaks out this support line, it automatically becomes a resistance line. So let's keep on moving. Let's find another area of congestion where the market had trouble or difficulty breaking out. Well, I believe here it's clear to see the market definitely had some trouble. Although it broke out here, it was just like a quarter of a point, like one tick. And here again, just like one tick, like a quarter of a point, and here a half a point or two ticks, and then even back down. And another line maybe, well, here we could say this one here in this area here is definitely a support. However, they're too close. They're just like half a point close. So I'd rather not draw two lines that close. Let's look for another area here. Maybe this one here, it acted as a support, and then as soon as it broke out here, it acted as a resistance for those two candles. And then here again, it was a strong resistance. And then it finally broke out here, and then it went all the way up, and then as support here, and then it broke out here and as a resistance here, and then again resistance here, and resistance and resistance. And then when it finally broke out this resistance, it acted as a support here, and again here, and then resistance, and then support again. So you can see clearly how these lines they work as sometimes support, and sometimes resistance. So guys, I believe this is the very basic of graphic analysis, understanding how the candle is formed, whether it's a positive or bullish candle, or if it's a negative or bearish candle, meaning it's going up or down, and the doji is open and close the same price, and learning how to draw this resistance and support lines is definitely going to help you guys trade better. All right, I hope that this video helped you guys, and I'll see you soon.